with fourth session of MCQ of accountancy, and the study material which has been issued to you, in that we will be solving from question numbers 71 to 93. Last lecture we solved 94 onwards. So 71 to 93 means almost 23 MCQs will be covering today. The reason for more number of MCQs covered today is because there are many theoretical questions also included in today's MCQ. So I'll be covering almost 23 MCQs in today's session. Okay. Now all these recordings are also available in our app. So in case if you miss out or you don't understand any concepts later on, you can go through the lecture again. It will be automatically available in the batch which you are assigned. Let's take it up. Take out the notebooks, pens, ready every one of you. Let's start doing the MCQs. 71st question. Look at it. At the time of reconstitution of partnership firm, recording of an unrecorded liability will lead to. Now, when reconstitution of firm takes place, unrecorded liability, we did not record it in our books of accounts. And now we identify we have to pay that money. So it's a burden on us. It's a loss on us. We did not consider it so far as our liability, but now it has been identified and we are supposed to pay that money. So it's a loss for the business. We did not expect, now we have to pay that money. Okay. So will it be gain to the existing partners? No. Will it be loss to the existing partners? Yes, existing partners will have to bear that extra amount. So the correct option will be loss to the existing partners. Neither gain nor loss to the existing partners, no. None of the above also. So it's a loss to the existing partners. Second question. E, F and G are partners sharing profits in the ratio of 3:3:2. That is the old ratio, 3:3:2. According to the partnership agreement, G partner is to get minimum amount of rupees 80,000. So again, that's a point of guarantee. Okay, again, that's a question of guarantee. Minimum amount means he has been guaranteed rupees 80,000 as his share of profits every year. And any deficiency on this account is to be personally borne by E only. Whatever is the deficiency in case of G, guarantee is given to G. Whatever is the deficiency of G will be entirely borne only by partner E. F is not going to bear any amount of deficiency. The net profit for the year ended 31st March 2021 amounted to 3,12,000. Now what is the main question asked? Calculate the amount of deficiency to be borne by E. So we'll have to solve it entirely. Okay. Very first of all, what are the net profits? The net profits are equal to 3,12,000. If we distribute the net profits between partners E, F and G. First, let us distribute it between the partners E, F and G. Okay, see what is the ratio? 3:3:2. What is the ratio? 3:3:2. In that ratio, if we distribute it, 3 plus 3, 6 plus 2, 8. 3/8, 3/8, 2/8. Okay, first we divide 3,12,000 by 8. 8 3s are 24. Then 7 to 8 9s are 72. 39,000. 39,000 into 3 will be equal to 1,17,000. Okay, 30,000 into 3, 90, and 9,000 into 3, 27. 90 and 27, 1,07,000. Again, 3 will be 1,17,000. And 39,000 into 2 will be 78,000. What will be G's share equal to? 78,000. Now, if you see over here, then G is guaranteed minimum amount of 80,000. G is guaranteed minimum amount of 80,000, but he gets only 78,000. He has been guaranteed 80,000. What is the guarantee given to G of 80,000? Okay, so if he has been guaranteed 80,000, what is the deficiency? 2,000. He is getting 2,000 rupees less. Now, who is going to bear this deficiency? This entire deficiency is going to be borne by E only. Entire deficiency is going to be borne by E only. So, entire 2,000 we will minus from E's share. Anyway, what is the main question asked? What is the deficiency borne by E? The answer will be 2,000. Okay, if you see in G's column, what is the deficiency to be borne by E? 2,000. Is that clear to every one of you? Going further, 73rd question. At the time of admission of a partner, what will be the effect of the following information? Balance in workman's compensation reserve is 40,000. Claim for workman's compensation is 45,000. Now, we have a reserve of only 40,000, but there is a claim of 45,000. How much excess claim is there? 5,000. That we will have to bear from revaluation account. Let's read the options and identify the correct ones. 45,000 debited to partner's capital account is wrong. 40,000, nothing will be debited or credited to partner's capital account because the claim is more. So excess 5,000 we have to debit to revaluation account and no distribution is going to be done between the partners. 40,000 debited to revaluation account is also wrong. 5,000 the excess amount will be debited to revaluation account and 5,000 credited to revaluation is also wrong. Basically the journal entry would be workman's compensation reserve account debit with 40,000, revaluation account debit with 5,000 and two workers claim with 45,000. So revaluation account will be debited with 5,000. This is the correct option. '74. In the absence of a partnership deed, no partnership deed is done. So we have to follow the provisions of Partnership Act 1932. Okay? A partner is entitled, in the absence of partnership deed, a partner is entitled as to an interest on the amount of additional capital advanced by him to the firm at the rate of. No additional capital interest is allowed. Okay? Interest on additional capital is not allowed. Okay, if no agreement is done, then only interest on loan is allowed at the rate of 6%. No interest on capital will be allowed, no interest on drawings will be charged, profits and losses will be distributed equally. However, if a partner has given loan to the firm, then 6% interest will be allowed on that. Except that, nothing else is going to be allowed or charged. So, what will be your correct option if no partnership deed is done? Not entitled for any interest on their additional capitals. Okay, 6% is wrong. It's not on capital, it is on loan. So this option is wrong. 6% interest is there, but on loan. Entitled to 10% on their additional capital, no. Entitled to 12%, no. No additional interest will be allowed on the additional capital. 75. Revaluation of assets at the time of reconstitution is necessary because their present value may be different from there. Why do we do revaluation of assets at the time of reconstitution of partnership firm? Because when the reconstitution is taking place, at that time their current values or market values may be different from the book values. We need to show balance sheet at true and fair position when the reconstitution takes place. So we bring the balance sheet at the current market values, so that now the new agreement which is going to be the new firm which is going to be introduced after the reconstitution has everything at the current values. So why do we do it? Because the present value may be different from the market values. If the current market value is different from the present value, revaluation of assets and liabilities is okay. Option A is the correct answer. 76. If average capital employed in a firm is rupees 8 lakhs, capital employed is given as 8 lakhs. Average of actual profits or average profits are 1,80,000 and normal rate of return is 10%. Then value of goodwill as per capitalization of average profits method will be how much? Now, what is the formula to be applied as per the capitalization of average profits method? First, we find capitalized profits. How do you find the capitalized profits? Capitalized profits are equal to average or actual profits. Okay, average or actual profits divided by normal rate of return into 100. That will be equal to, here average or actual profits are how much? 1,80,000 and normal rate of return is 10%. So average or actual profits 1,80,000 divided by normal rate of return 10 into 100 will give us 18 lakhs. Okay, this capitalization of average profits method. From our capitalized profit 18 lakhs, we minus capital employed and then we directly get goodwill. What is the capital employed given in the beginning? 8 lakhs. From 18 lakhs, if you subtract capital employed 8 lakhs, then by capitalization of average profits method, what is the amount of goodwill equal to? 10 lakhs. Goodwill will be equal to 10 lakhs. So accordingly, what will be your option? Option A. Okay, goodwill will be equal to this option A, 10 lakhs. I hope everyone is clear with that. Then 77th question. Right? Once again, keep it in mind, capitalization of average profits and capitalization of super profits give you the same answer. So here we can find by capitalization of super profits also. Even if you do by that, your final answer will come C. So from MCQ's point of view, in case in exams you are not able to recollect the actual formula of goodwill by capitalization of average profits, you apply capitalization of super profits. Means you find out super profits, capital employed 8 lakhs into 10%, normal profits 80,000. Actual profits 1,80,000 minus normal profits 80,000. 1 lakh would be super profits. Then you apply capitalization of super profits formula. Super profits 1 lakh upon normal rate of return 10 into 100. Then also you will get 2 lakhs. So answer by both the methods will come same. In exams, if you get nervous, forget any one formula, then in MCQ you can apply the other and also solve the others. Okay, keep it in mind. 77th question. Which of the following situation Companies Act 2013 allow? In which of the following situation Companies Act 2013 allows for issue of shares at discount? Normally, shares cannot be issued to the public at discount. Even shares cannot be issued to the underwriters, promoters, or vendors, means consideration other than cash at discount. You can issue at par or premium. In which situation can you issue the shares at discount? When you issue to your own employees, promoters, ESOP scheme, or sweat equity shares are issued. Those shares can be issued at discount. Sweat equity shares means itself what? You issue the shares to the existing directors, promoters, employees of the company at huge discount, less than the market value. Okay. So generally at discount it can be issued as a sweat equity shares. Option C. 78. As per section 52 of Companies Act 2013, security premium reserve cannot be utilized for See, what you have studied, that security premium can be utilized to write off the discount on issue of debentures. Then we also studied first priority, we have to use security premium to write off the loss on issue of debentures, LOID, that is premium on redemption or loss. Further, we can use security premium even in giving bonus shares. Okay. Now, we cannot utilize it for what purpose? Writing off capital losses? Yes. We cannot utilize it to write off capital losses. Capital losses are to be written off from the respective capital profit or from statement of P&L account. You cannot use shareholders' extra money security premium to write off your capital losses. So this is actually the correct option. But let us see the other things also. Security premium, can you use it to issue fully paid bonus shares? As I said to you right now, yes, it can be used to give bonus shares. Can we use it to write off discount? Yes. Can we use it to write off preliminary expenses? Yes. But we cannot use it to write off capital losses. Okay. So option A is the correct answer. 79. Net assets means capital reserve is purchase consideration, goodwill, total assets, liquid assets. Net assets minus capital reserve. Okay. Now, net assets minus capital reserve will always be equal to purchase consideration. Okay. See here, you pass the journal entry, assets account debit, when you issue shares or debentures for consideration other than cash. To liabilities, to vendor account with the amount of purchase consideration. To vendor account with the amount of purchase consideration. Now, if assets minus liabilities are equal to net assets, if you are paying more than net assets, it is goodwill. If you are paying less than net assets, it is capital reserve. Okay. So can I say net assets minus capital reserve will be equal to purchase consideration? You are paying less than net assets. Suppose net assets are 10 lakhs. You are paying 9 lakhs. Means 1 lakh is your capital profit. Okay. So your purchase consideration 9 lakhs. Will it be equal to 10 lakhs minus capital profit, capital reserve of 1 lakh or not? So always remember, purchase consideration will be equal to either you can say net assets minus capital reserve or net assets plus goodwill. Okay, you can write down these two things somewhere. Purchase consideration will always be equal to either net assets minus capital reserve or net assets plus goodwill. Goodwill, we are paying more, so we add it. Capital reserve, we are paying less, it's our capital profit, so we minus it. Okay, so option A will be your correct answer, purchase consideration. Net assets minus capital reserve will be equal to purchase consideration. 80. Kalki and Kumud were partners, sharing profits and losses in the ratio of 5:3. The old ratio is 5:3. On 1st April 2021, they admitted Kostub as a new partner, and the new ratio was decided as 3:2:1. Goodwill of the firm was valued at 3,60,000. Value of goodwill is directly given 3,60,000. Kostub couldn't bring any amount for his goodwill. So we will be taking the amount from his capital. The amount of goodwill share to be credited to Kalki and Kumud account will be. Just pass the entry of goodwill and we'll get it right. Okay, how do we pass the entry of goodwill if the new partner does not bring any amount of goodwill? Okay, if new partner does not bring any amount of goodwill, then the entry is Kostub's current account debit, new partners current account debit to old partners capital in sacrifice ratio, to Kalki and Kumud in sacrifice ratio, to Kalki's capital account and to Kumud's capital account in sacrifice ratio. This is done in sacrifice ratio. So in this, we already know that new partner Kostub's share is going to be 1, 3 plus 2, 5 plus 1, 1 by 6. So he has to break 3,60,000 into 1 by 6. That is 60,000. His current account will be debited with 60,000 because he is not bringing the money right now. It is receivable from him in future. But how will you distribute this between the old partners Kalki and Kumud in sacrifice ratio? Let us find the sacrifice ratio Kalki, Kumud and Kostub. Okay, Kalki, Kumud and Kostub. How do we find the sacrifice ratio? Old ratio minus new ratio. What is the old ratio of the three partners? Two partners, 5:3. Old ratio, 5:3. 5 plus 3 is 8. 5 by 8 and 3 by 8. Kostub is admitted and the new ratio is given as 3:2:1. 3:2:1. 3 plus 2, 5 plus 1, 6. 3 by 6, 2 by 6, 1 by 6. Now, how do we find the sacrifice ratio? Old ratio minus new ratio. Okay, how do we find the sacrifice ratio? Old ratio minus new ratio. Old ratio 5 by 8 minus new ratio 3 by 6. Old ratio 3 by 8 minus new ratio 2 by 6. Now 8 and 6. 8 the factors are 4 into 2 and 3 into 2. So 4 into 3, 12 into 2. 24 will be the LCM. Okay, least common multiple will be 24. 8 into 3 is 24. So 5 into 3, 15. 6 into 4 is 24. So 3 into 4, 12. 15 minus 12, 3 by 24. Same way here. 8 into 3 is 24. So 3 into 3, 9. 6 into 4 is 24. So 2 into 4, 8. 9 minus 8. That will be equal to 1 by 24. What is the sacrifice ratio? 3:1. If you remove the denominator, then what is the sacrifice ratio? 3:1. 3:1 means 3 by 4, 1 by 4. This amount, 60,000, will be distributed in the ratio of sacrifice, which is 3:1. Okay, in sacrifice ratio will distributed which is 3:1. So 60,000 into 3 by 4. 60,000, this will be equal to 60,000 into 3 by 4. 4 into 15. 15 into 3, 45,000. And 60,000 into 1 by 4, 15,000. Okay, 60,000 into 1 by 4. This amount will be equal to 15,000. So what is your answer? 3:1 ratio. If you distribute 60,000, what amounts will go to Kalki and Kumud's capital account? 45,000 and 15,000. Which options will go with this? Option D. Okay, the amount of goodwill to be credited to Kalki and Kumud's capital account will be equal to 45,000 and 15,000 respectively. '81. Sarvesh, Sriniketan and Srinivas are partners in the ratio of 5:3:2 old ratio. If Sriniketan's share of profit at the end of the year amounted to 1,50,000, Sriniketan's share of profit is given 1,50,000. They are asking you what will be Sarvesh's share of profit. You just have to make the profit sharing ratio and by equation method you have to solve it. Okay. So Sarvesh Sriniketan and Srinivas. Third partner is Srinivas. What is their profit sharing ratio? 5:3:2. Now, what is this 1,50,000? It is Sri Niketan's share of profit. Sri Niketan's share of profit is 1,50,000. Okay? Sri Niketan's share of profit is 1,50,000. And what are you asked? You are asked Sarvesh share of profits. Means this is what you are asked. Sarvesh share of profits. How would you find that? Simple equation. When Sri Niketan gets 3 rupees, Sarvesh gets 5 in the profit sharing ratio. When Sri Niketan's share is 3, Sarvesh is 5. So if Sri Niketan gets 1,50,000, how much should Sarvesh get? 1,50,000 multiplied by 5 divided by 3. 1,50,000 multiplied by 5 divided by 3. 3 into 5 is 15. So 50,000 into 5, 2,50,000. Okay, simply by equation method. Same way, if Srinivas share was asked, then you would have done 1,50,000 into 2 divided by. Okay, here the answer is 2,50,000. So that is option D. Option D, 2,50,000 will be your correct. Okay, I hope everyone is clear with this. Going to 82nd. Yes, okay. I'll pull out the 82nd question here. By mistake, it has gone down the left side. Let's understand 82nd question over here. Angle and Circle were partners in a firm. Their balance sheet showed furniture of rupees 2 lakhs, stock at 1,40,000, debtors at 1,62,000, creditors at 60,000. Square was admitted and a new profit sharing ratio 2:3:5. Stock was revalued at rupees 1 lakh. Okay, stock was revalued at rupees 1 lakh. Creditors 15,000 are not likely to be paid. Debtors of 2,000 have become irrecoverable, means bad debts. And provision for doubtful debts also we have provided 10%. A lot of information is given related to admission of a partner. What is asked in the question? Angle's share in the loss on revaluation amounted to 30,000. Okay, that is also given. Partners' share in loss on revaluation is also given. This is an important question. Okay. Now, what is asked to you? Revalued amount of furniture. Revalued value of furniture will be how much? Now, what we will have to do here is to find the revalued value of furniture. First, we will have to make revaluation account. Why? Because you all can see over here that stocks information is given to you that it was revalued at 1 lakh. Then Debtors, it is given that 2000 has become irrecoverable. Creditors information is given to you. Even provision for doubtful debts is given to you. For furniture, which is of 2 lakh rupees, no information is given. Is it valued more or is it valued less? And even loss of revaluation of Angel's share is given to you. Even Angel's share in loss of revaluation is given to you. We will make a rough revaluation account. We'll put all the figures in revaluation account. And then whatever balancing figure remains in revaluation account, debit side or credit side, will represent the profit or loss on furniture. If the balancing figure comes in revaluation debit side, it's the decrease in the value of furniture. If the balancing figure comes in revaluation credit side, it's increase in the value of furniture. Then we can find out what is the revalued amount of. So first of all, we will have to make revaluation account over here. Okay. First of all, we'll have to make revaluation account over here. A rough revaluation account we will make to find out is there a profit or a loss. Now, how will we enter the things in revaluation account? Let's understand it. Square was admitted and the new profit sharing ratio was agreed at 2:3:5. Now, stock revalued at 1 lakh against 1,40,000. If stock is revalued at 1 lakh against 1,40,000, debit side we will have the entry of stock with rupees 40,000. Stock's value has decreased by 40,000. Okay, against 1,40,000 is 1 lakh. So we will be sad. Sad things will come on the debit side. And happy things we will write on the credit side. Okay, happy things we'll write on the credit side. Here, revaluation account stock has gone down by 40,000, so we'll write on the debit side. Then what is the next information given? Creditors of 15,000 are not likely to be paid. Now 15,000, if they are not likely to be claimed, will you be happy or sad? You'll be happy, you don't have to pay the money. Happy means you'll write it on the credit side. This is our profit. We don't have to pay how much amount to the creditors? 15,000 we will write on the credit side. Okay. 15,000 will write on the credit side. Further, $2,000 of debtors are irrecoverable. Will you be happy or sad? Sad. It's bad debts for us. 2,000 of debtors are irrecoverable means it is bad debts for us. Okay. So 2 bad debts will write on the debit side 2,000. Okay, bad debts will also come on the debit side. Then provision for doubtful debts to be provided at 10%. Now on what amount will be provided 10%? Here you all can see debtors are 1,62,000 minus bad debts first 2,000. So remaining balance of debtors will be 1,62,000 minus 2, 1,60,000. On that we have to provide 10% bad debt reserve. Okay. So what is the amount of bad debt reserve or provision for doubtful debts? Debtors are 1,62,000 minus bad debts 2,000 into 10%. So 1,60,000's 10%, what will be the amount? 16,000. 1,60,000's 10% bad debts provision will be 16,000. Now, Angel's share in the loss of revaluation amounted to 30,000. Loss on revaluation would come on the debit side. Loss on revaluation would come on the debit side, which goes to partner's capital account. Now, in case of admission of partner, this revaluation loss is distributed only between the old partners, that is Angel and Circle, in their old ratio. Okay, no ratio is given means it's equal. Their old ratio is 1:1. No information is given, it means the old ratio is equal 1:1. Here, if Angel's share, Angel's share is 30,000 and if the ratio is equal, Then what would be circle's share? If the ratio is equal and angle gets 30,000, then circle's share would also be equal to 30,000 in equal ratio. That means what is the total loss? 60,000. Okay, because of no information given, profit and loss sharing ratio will be taken equal. Now what do people will do? Okay, profit comes on the debit side, I'm sorry, loss comes on the credit side. This entire thing will come on the credit side. Profit will remain on the debit side, loss will remain on the credit side. Angle's share is given 30,000. So circle's share will also be 30,000 as the ratio is equal. Total revaluation loss would be 60,000. Total revaluation loss would be 60,000 plus this creditors are already there with 15,000. Now whatever balance remains in revaluation account, if it comes on the debit side, it is loss of furniture. If it comes on the credit side, it is profit of furniture. 40, 42, 58 and 15 plus 60, 75. Which side is more? Credit is more. So 75,000 minus 58,000. 40 plus 2 plus 16, 58. 75 minus 58, 17,000. What is this 17,000? Loss of furniture. To furniture account in bracket balancing figure. And what does this balancing figure on the debit side represent? Loss, decrease in the value of furniture. Had the same balance come on the credit side, it would represent increase in the value of furniture. Debit side, decrease in the value of furniture. Now, here you all can see how much is the furniture account given in the question. Furniture's value is given how much? See here, furniture's value is given 2 lakh rupees. And there is loss in furniture's value of 17,000 as we have seen just now. Okay. Loss in furniture's value is how much? As we have seen just now, 17,000. So, what will be the revalued amount of furniture? 2 lakh minus loss of 17,000. It would be equal to 1,83,000. Means what would be the correct option? Option D. What is the revalued value of furniture? 1,83,000. Okay. Once again, such a question is very important. How is it to be solved? You make a rough revaluation account and then you work out whether in revaluation account the balancing figure comes on the debit side or on the credit side. If the balancing figure comes on the debit side, it is decrease in the value of an asset. In case if it comes on credit side, it would represent increase in the value of an asset. This you will minus it on the credit side. If the amount comes, you would plus it. Okay. Here debit side we minus it. So 2 lakh minus 17, it comes to 1,83,000. Now, going further, question number 83. Asha and Nisha are partners sharing profits in the ratio of 2:1. So, old ratio is 2:1. Kashish was admitted for 1/4 share, of which 1/8 was gifted by Asha. Now, this is something very, very important. Let's understand what is the importance of it. Okay. The remaining amount was contributed by Nisha. 1/4 share of which 1/8 was gifted by Asha, remaining was contributed by Nisha. Now, the goodwill of the firm is valued at rupees 40,000. How much amount for goodwill will be credited to Nisha's capital? First of all, as it is the case of admission of partner, Asha and Nisha will be credited in sacrifice ratio. For goodwill, we have to credit them in which ratio? Sacrifice ratio. Now, how to treat giftings portion, all of you understand it properly. Whenever there is any gift given by one partner to another, whenever they say gifted by one partner to another, then remember that in calculation of new ratio, you have to consider in calculation of new ratio, you need to consider it. Because gifted also means that old partner's share is going to decrease. So his new ratio will be less. But when we do the calculation for goodwill, we distribute the goodwill in sacrifice ratio. We distribute the goodwill in sacrifice ratio. For goodwill's sacrifice ratio, gift is not to be taken into consideration. Ignore it. Not to consider the gift part. Because gifted means free of cost. Normally, sacrifice ratio normally comes for the compensation of goodwill. If you sacrifice the profits, it means you have to give the goodwill. Okay. Sacrifice means you have to give the goodwill against the sale. But here you are gifting it, means you are not going to give the goodwill for it. If you sacrifice, you have to pay compensation in the form of goodwill. If you gift, you don't have to give any compensation in the form of goodwill. You are gifting it free of cost. So when we calculate goodwill, then sacrifice ratio will not include the part of gift. Okay, sacrifice ratio will not include the part of gift. Now, over here, if you see, then 1/4 share of which 1/8 was gifted by Asha. Gifted by Asha will not be considered for goodwill. What did we see? Gifted by Asha will not be considered for goodwill, not to be taken for goodwill. Gifted by Asha means it is not to be taken for goodwill. And goodwill is valued at 40,000. The remaining was contributed by Nisha. Means entire sacrifice is of Nisha only. Entire sacrifice from Nisha only for the purpose of goodwill I am saying. Gifted is not to be considered. So if we ignore the gifted part by Asha, okay, in new ratios calculation you take it into consideration, but for goodwill you don't take it into consideration. So if Asha is gifting 1/8 to the new partner, that is Kashish, for gifting Asha is not going to get any goodwill compensation. For this gifted part, Asha is not going to get any compensation of goodwill. And who contributes the remaining amount? Nisha. Means Nisha is not gifting. Nisha is sacrificing her share of profits against which she will expect goodwill from the other party. So here, entire amount of goodwill 40,000 will go only to Nisha. Means answer will be D, 40,000. Okay. See students, all of you understand it once again properly and perfectly well. Whenever in admission of partner gifting comes, one partner gifts the share to another partner. If you have to find the new ratio, then that new ratio will be equal to old ratio minus gifted amount minus sacrifice, both. Okay. But when we have to distribute goodwill between the old partners in sacrifice ratio, then that gifting is not to be taken into consideration because gifted means free of cost. Sacrifice means you sacrifice your share of profit in future, and for that you demand goodwill compensation from the new admitted partner. But when you gift anything, you don't demand anything in compensation as goodwill. So when you gift something, for that goodwill is not going to be given. Because over here, Asha has only gifted and not sacrificed any amount, Asha will not get goodwill. Whereas Nisha has actually sacrificed and contributed her share of profits, she will get goodwill. So entire 40,000 of goodwill will go only to Nisha. Okay. Now in this same question, if new ratio was to be obtained, then we would have considered gift and minus that from Asha's share to find the new ratio. So from exam point of view, you people keep this noted down somewhere as very important point. Whenever one partner gifts the share to another partner, in calculating the new ratio, you do consider it. But in calculation of goodwill, gift will not be considered as a part of sacrifice ratio. Okay, keep this point in mind, every one of you. 84th question. Anubhav, Shagun and Pulkit. are partners in a firm sharing profits and losses in the ratio of 2:2:1. On 1st April 2021, they decided to change their profit sharing ratio to 5:3:2. This is the old ratio, this is the new ratio. Okay. On that date, their debit balance of profit and loss of 30,000. Which balance? Debit balance. Okay. Appeared in the balance sheet, and partners decided to pass in adjusting entry for it. Adjusting entry means, what did we study? If there are favorable balances means reserve, not debit but credit balance of P&L, workmen's compensation reserve, investment fluctuation reserve, the entry will be similar to goodwill. Gaining partners capital account debit to sacrificing partners capital. But if there are unfavorable balances like we have here, debit balance of P&L account, unfavorable balances, okay. Like we have here, debit balance of profit and loss account, or maybe old goodwill, or advertisement campaign expenditure, deferred revenue expenditure, then entry will become reverse. Instead of gaining to sacrificing, it will become sacrificing partners capital account to gaining. Means, because it's a debit balance over here, what will be the entry? Sacrificing partners capital account debit to gaining partners. Okay. To identify the correct option A, B, C, D, let us find sacrifice and gain ratio of the whole partners, all the partners. Okay. Anubhav, Shagun and Pulkit. Anubhav, Shagun, Pulkit. Old ratio is 2:2:1. Okay, old ratio is 2:2:1. 2 plus 2, 4 plus 1, 5. 2 by 5, 2 by 5, 1 by 5. New ratio is 5:3:2. 5 plus 3, 8 plus 2, 10. 5 by 10, 3 by 10, 2 by 10. Now, how would you find the sacrifice ratio? Old ratio minus new ratio. 2 by 5 minus 5 by 10. Similarly here, 2 by 5 minus 3 by 10. And here, 1 by 5 minus 2 by 10. Now, LCM is 10. 5 into how much is 10? 2. 5 into 2, so 2 into 2, 4. Minus 10 as it is, so 5. 4 minus 5 minus 1 by 10. Again LCM 10. 5 into 2 is 10, so 2 into 2, 4. 4 minus 3, 1 by 10. And over here, 5 into 2, so 1 into 2, 2 minus 2, 0 by 10. So Pulkit neither gains nor sacrifices 0. And over here, minus 1 by 10 means gain, and positive 1 by 10 means sacrifice. Okay, second partner Shagun is sacrificing, first partner Anubhav is gaining. Now, what did I discuss with you? What are we supposed to do? Because there is a debit balance, unfavorable balance. Instead of doing gaining to sacrificing partner, we are going to do sacrificing to gaining. Who is sacrificing? Shagun. So Shagun's capital account we will debit. Okay. Who is sacrificing? Shagun. So Shagun's capital account we will debit. Shagun's capital account we will debit. And who is gaining? Anubhav. So Anubhav's capital account we will credit. This will be the entry of debit balance of P&L accounts, adjustment entry. When adjustment entry means directly to partners capital, we have to make the adjustment. How much is debit balance of P&L account given in the question? 30,000. What is the debit balance of P&L account given in the question? 30,000. That 30,000's 1 by 10 will be 3,000. Okay, 30,000 into 1 by 10 will be 3,000. So 3,000 we will debit to Shagun and credit to Anu. 3,000 rupees we will debit to Shagun and credit to Anubhav. Means what will be the correct option over here? If you have to debit to Shagun and credit to Anubhav 3,000 rupees, you all can see this is the correct option. Shagun capital we have to debit with 3,000 and Anubhav's capital account we have to credit with rupees 3,000. Still, let us read the other options. Pulkit is not going to be affected, so this is wrong. Okay, he is neither sacrificing nor gaining. Shagun's capital account will be debited by 30 is wrong. 30,000 is the entire PL. Adjusting entry is done only with gain ratio and sacrifice ratio 1 by 10, so 3,000. Shagun's capital account will be debited by 3,000 is correct, but Anubhav and Pulkit is wrong. Will be credited by 2,000 and 1,000. Entire will go only to Anubhav because Pulkit neither sacrifices nor gains. His gain or sacrifices 0. Okay. So correct option is option A. Shagun's capital account will be debited by 3,000 and Anubhav's capital account will be credited by 3,000. Why? Shagun is the sacrificing partner, Anubhav is the gaining. I hope everyone understood this. And be very careful in questions. It is quite possible that they may ask you instead of debit balance of P&L account, they may give you the credit balance of P&L, reserves, etc. also. There the entry will become gaining partner to sacrifice. Okay? Similar to goodwill. Now, 85th question. A, B and C are partners. Their partnership deed provides for interest on drawings at the rate of 8% per annum. Okay, interest on drawings is at the rate of 8% per annum. B withdrew fixed amount in the middle of every month. Middle of every month means 15th April, 15th May, 15th June and so on. And his interest on drawings amounted to 4,800 at the end of the year. What was the amount of his monthly drawings? Be careful. What is asked is monthly drawings. Let us apply the formula and solve it. How would you solve this with the formula? The formula is interest on drawings is equal to annual drawings into rate of interest upon 100 into average period divided by 12. Okay. Interest on drawings is annual drawings into rate of interest upon 100 into average period divided by 12. What is the interest on drawings amount already given to you over here? 4,800. Left side of the equation, interest on drawings is already given as 4,800. We are asked monthly drawings. So first we'll find annual drawings, then we'll divide it by 12. So we'll get monthly drawings. Rate of interest is given 8% per annum. And how would you find this average period? He withdraws the amount in the middle of every month. Okay, middle of every month. So how will you find the average period? Period after first drawings plus period after last drawings divided by 2. If he withdraws the first money on 15th of April, what will be the period after first drawings? 11 and a half months. Last drawings will be on 15th March. So what will be the period after last drawings? Only half a month. 11.5 plus 0.5, 12 divided by 2. What will be the average period? 6 by. Okay, I hope everyone is clear with this. 15th of every month if you withdraw the money, then 15th April what you withdraw, 11 and a half months will be left of first drawings. 15th March, last drawings what you withdraw, half a month will be left of. Average period will come to 6 months. Now how can you find this average drawings? 100, 12 will get multiplied, 4,800 on the other side into 100 into 12. 8 and 6 on the other side will get divided. Now 6 into 2 is 12. 8 into 6 is 48. Okay. 600 into 100, 60. 600 into 100, 60,000 into 2, 1,20,000. Okay, 600 into 100, 60,000 into 2, 1,20,000. This is annual drawings. What will be monthly drawings? 1,20,000 divided by 12. Monthly drawings will be equal to 10,000. Since you are asked monthly drawings, the answer will be 10,000. Option A. Monthly drawings. If annual drawings are asked, then 1,20,000. Question number 86. Abhay and Baldwin are partners sharing profits in the ratio of 3:1 old ratio. On 31st March 2021, firm's net profit is 1,25,000. Net profit is 1,25,000. The partnership provided for interest on capital to Abhay and Baldwin 15 and 10,000 respectively. Interest on drawings 6,000 from Abhay and 4,000 from Baldwin. Abhay is also entitled to commission of 10%. Abhay is going to get on net divisible profits. Now this is important. Net divisible profits. So if the profits available are before that, we will do 10 upon 110. Because it is net divisible profits, we will do 10 upon 110. Okay, here we will do 10 upon 110 to get the amount of commission. Calculate the profit to be transferred to partners' capital account. So we have to make a P&L appropriation account for this. To find the profit to be transferred to partners' capital account, we'll have to make rough P&L appropriation account. Let us make it. Rough P&L appropriation account, how will you make it now? Very first, where will the net profit of 1,25,000 go on the credit side? Net profit 1,25,000 will go on the credit side. Then what else is given to you? Interest on capital will go on the debit side. Okay, interest on capital will go on the debit side. Who are the two partners? Abhay and Baldwin. So Abhay 15,000, Baldwin 10,000. Okay, on the debit side, Abhay 15,000, Baldwin 10,000. Total interest on drawings will be 25,000. Interest on capital, sorry. Interest on drawings will come on the credit side, 6,000 and 4,000. Interest on drawings will come on the credit side by interest on drawings. Abhay and Baldwin. Abhay is 6,000 and Baldwin is 4,000. Okay, that will come on the credit side, 6,000 and 4,000, 10,000. Thereafter, commission is given, only commission is left out because it is net divisible profit, let us do 10 upon 110. What is the profit? Credit side total coming to 1,25,000 plus 10, 1,35,000. 1,35,000 minus 25. 1,10,000 is left out. What is this 1,10,000? Profits before commission. So how will we calculate commission? 1,10,000 into 10 upon 110. Okay, why 10 upon 110? Because these are the profits before commission. And we have to give 10% commission on the net divisible profits. Divisible profits would be the profits after commission. So we will do 10 upon 110. 0 will get cancelled. 11 into 10,000. What would be the amount of commission? 10,000. Now 1,10,000 minus 10,000. What amount will be distributed between the partners? 1 lakh. What amount will go to partners capital account? Only 1 lakh. What is the question asked? Calculate the profit to be transferred to partners capital account. What amount will be transferred to partners capital account? 1 lakh rupees. Okay. 87. Now 87 is theoretical one. We take it up. Given below are the two statements, one labeled as assertion and the other as reasoning. Now, what is the assertion? Here, assertion A. Revaluation account is prepared at the time of admission of partner. Yes, correct. We prepare evaluation at the time of reconstitution. So when changes in profit sharing ratio take place, admission, retirement, death. In all these situations, we prepare evaluation account. This is correct. Okay. What is the reason given to you? It is required to adjust the values of liabilities and assets at the time of admission of partner so that the financial position of the firm is reflected. This is also correct. Why do we prepare evaluation account at the time of reconstitution? So that the new balance sheet shows the correct financial position of the firm. Correct values are reflected. So both are correct. A is also correct, R is correct, and R is the correct explanation of A also. So answer will be option A. Both A and R are correct and R is the correct reason of A. 88th question. APA Limited forfeited 4,000 shares of rupees 20 each. Face value is 20. Fully called up. Entire 20 is called by the company on which only application money 6 has been paid. Out of these 2,000 shares were reissued. This will have some relevance because generally in forfeiture, profit etc. transfer to capital reserve is based on reissued shares. And 8,000 has been transferred to capital reserve. See, I told you what is transfer to capital reserve? 8,000. So profit will be based on that only. Okay, on reissued shares. Now what is asked in the question? Calculate the rate at which these shares were reissued. This kind of question we have done earlier also. What you do is, first you apply the formula and find the discount. Once you get the amount of discount, then you further calculate the reissue price. So how do we find the amount of capital reserve profit? It is equal to amount paid or amount forfeited minus discount into number of shares which are reissued. Okay, into number of shares which are reissued. Now in this question, what is the amount already transferred to capital reserve given to you? 8,000. So left side of the equation, 8,000 will be taken as transfer to capital reserve. What is the amount paid, forfeited amount paid by the shareholder? Only application money of 6 has been paid. So this will be the amount paid or amount forfeited. Okay. What is the amount forfeited? 6. Discount we don't know. And what are the number of shares reissued? 2,000. Now 2,000 will get divided. 8,000 divided by 2,000 will be equal to 6 minus discount. So what is that equal to? 4 rupees. Discount on the left side will become plus, 4 on the right side will become minus. So what will discount be equal to? 6 minus 4, 2 rupees. Now 20 rupees shares fully called up. If you have issued at a discount of 2, then what is the reissue price? 18 rupees. Out of 20 rupees called up, if 2 is given as discount, then what is the reissue price? 18. This is your correct answer. Okay. Now, 1 hour is already over, so remaining MCQs will further practice in the next session. Till 93 we were supposed to do today, but those 5 questions we'll do in the next session. So it is 9 to 93 and the questions before 70. Almost 20 questions before 70. Those we will see in tomorrow's session. Okay. So that'll be all for today. Bye everyone. Take care. कितने participants?